All attendees are in listen-only mode.
Good afternoon, everybody. I'm delighted to welcome you to today's webinar about getting paid online when selling internationally. My name is William Barnes-Graham and I am the Digital Content Manager at Open to Export. We are an online community helping small businesses get ready to sell overseas through our step-by-step articles and guides, regular webinars, Ask the Experts forum, and our Export Action Plan tool. You can find all of these on our website at www.opentoexport.com. Open to Export is powered by the Institute of Export and International Trade, the UK's only professional membership body for international trade, offering a unique range of individual and business membership benefits, education and training catering for beginners through to master's degrees, and an always exciting and prestigious programme of events celebrating UK businesses' exporting achievements. We will be running a live Q&A at the end of the session. You can ask questions at any point during this webinar using the question box on the control panel to the right-hand side of your screen. We have two great speakers today. We'll first have Kevin Shakespeare from the Institute. Kevin will be giving an overview of some of the differences between getting paid domestically and internationally, introducing some of the key principles and mechanisms involved in international payments. Following Kevin, we'll have Emil Strickland from Thrive Digital. Emil's an e-commerce specialist and he'll be guiding you through some of the payment gateways available to exporters, giving some top-notch e-commerce tips along the way. But first off, over to you, Kevin.
Yes, thank you, Will. Good afternoon, everyone. I'd like to introduce myself as Kevin Shakespeare. As Will has indicated, I will give an overview around getting paid internationally. The primary purpose of today's webinar is around the online element, but as I said, I'll just give an indication around the opportunity around exports, some of the differences when trading internationally, some of the payment methods that can apply as well as getting paid, and also trying to assess the creditworthiness of the customers. So if we look at the next slide, we want to think about exports for a world of opportunity, and clearly those on the call will have been thinking about exporting or are exporting currently. And there's a wonderful saying that you may have heard that sales turnover is vanity, profit is sanity, and the important aspect of that is that you must get paid. So winning a sale is not necessarily a full sale until you actually get paid. But exports give that opportunity to expand your markets to new horizons, and the amount of consumers clearly based overseas is far greater than those in the United Kingdom. So we move on to the next slide. We'll look at some of the differences around taking payment internationally. The emphasis here will probably be around the business to consumer, B2C element, but welcome to take questions at the end, in particular around some of the B2B elements if there are delegates on the webinar today who also have relevance for selling to businesses internationally. So clearly selling overseas, you may know less about the buyer, and certainly you may find it difficult to know if the buyer is a good payer unless you've got that track record. And clearly within the European Union, the concept of the single market, which the United Kingdom is still part of, it's a highly competitive market. The rules within the EU mean that different businesses can sell across to consumers subject to some legislation around consumer rights, but it's generally a wider and larger market. So equally the buyer will know less about yourself as the seller, so you may have to convince them that you are a reliable provider of goods and services, and equally that you will deliver on time. And that is obviously a harder sell in theory if you are asking for money up front, online or by credit debit card. So clearly the ability to demonstrate that you have a product worth selling that's potentially unique, and you can deliver it on time to the correct specifications is very important. But there could also be aspects of the actual international trade transaction that can make you competitive. So the likes of exchange rates would be one example. Clearly the pound has been weaker in recent times against the likes of the euro and the US dollar. But it's important, if you're looking at an export strategy, that you don't build the whole strategy on the current exchange rates, because that's probably not going to be a long-term strategy, but it could be a strategy to give you an opportunity to enter overseas markets. So we look at the next slide and think about the payment conventions, which I've already referred to some extent. The basic payment conventions, and to think about this a bit like selling your car, is that you can effectively sell on what's called open account trading, which is effectively send the goods or services to the buyer, and then they make payment once they've received it. Clearly, from the buyer's perspective, that's preferable because they get the opportunity to look at and test the product. But from your point of view, it's less preferable because you've got to wait longer for payment, so that could have an impact on your cash flow and working capital, but equally you don't have that guarantee of payment. So depending on monetary sums and the nature of the goods and services, businesses will want to consider advance payment, and clearly online lends itself to that, and also possibly part payment or stage payment. Whereas, for example, under part payment, 40-50% up front, 40-50% on delivery. Or possibly stage payment if you have a product or service that can be released in stages, such as, for example, in software. So those are some of the general principles there, but also important potentially if you're selling overseas to try and trade in the local currency. But clearly it would need to be what's called a hard tradable currency, such as the euro and US dollar, clearly. That might increase your chances of sale because you're making it easier and effectively taking the exchange rate movement risk away from the buyer of the goods and services. So we look at the next slide. We'll quickly look at the ways of getting paid, but and this links in nicely with the next presentation, which talks about the online element. So clearly online is increasing dramatically in terms of payment methods, and some of these payment methods that you can see on the screen now will possibly apply more for business to business or for slightly larger monetary transactions. So international payment has been around for years, effectively through what's referred to as IBAN and BIC codes, where money is transferred internationally between banks and bank accounts. And within Europe, we have what's called a single European payment area. So we look at the last one, the lower elements of this slide. There is a direct debit scheme in place within Europe, which is both on a B2C, business to consumer, and B2B, business to business basis as well. So for some types of businesses, for example in the subscription industry, the actual SEPA direct debit scheme can be very useful. Elements such as checks are used less in international trade, with the perhaps exception of the United States, which to some extent is still a check economy. But clearly we would recommend that sellers overseas do not try and use checks because of the risk of non-payment even once you've received a check and presented it. If you have a large volume of transactions, you may want to look at opening up a local bank account overseas, but that would be more for multiple transactions and perhaps slightly less online transactions. It makes it easier for the buyer to pay locally than actually having to pay internationally with the increased fees. Credit debit cards will be referred to in the later presentation, but just wanted to make the point around interchange fees. So clearly the higher the monetary funds, the monetary sums, the higher the interchange fee, and especially for smaller businesses that may be paying interchange fees of 2, 3, 4% on a transaction, it potentially makes it less attractive. PayPal will be talked about later in the presentation as well. And finally, just to add, for larger transactions, more on a business-to-business basis, you have instruments like documentary letters of credit, collections, and advance payment guarantees. Final thing I wanted to mention on this slide is escrow accounts. Again, potentially for certain types of transactions, money held in escrow could be important. And if anyone would like further information in that respect, please register your interest, and we'd be happy to provide further information there. So finally, before I end the presentation, the final slide just re-emphasises the need to assess the creditworthiness. Again, if it's online for smaller monetary sums and you get an advance payment, it reduces the risk. But if you have a risk of sending the goods and services and you're waiting for payment, it's always best to try and assess the creditworthiness of the person you're paying. And that can still still apply for smaller monetary sums as well as large monetary sums. So possible use of credit reference agencies, trade references, or if you're going to trade with a buyer on a longer term basis, trying to get them to know the buyer as well, which doesn't always mean that you have to go and physically meet the buyer overseas, but you can also use Skype and other online mechanisms to actually meet the buyer as well. So on that note, I'd like to pass back to Will, and thank you very much for listening to me today.
Thank you, Kevin. Really great kind of overview of international payments in general. And I guess just about last slide, I guess that's DIT, not UKTI. But yeah, thank you very much. Really, really useful. And I'm going to hand over to give more of the e-commerce perspective. I'm going to hand over to Emil. So over to you, Emil.
Good afternoon. My name is Emil Strickland. I'm the Managing Director of Thrive Digital, which is a boutique agency and consultancy who specialize in international e-commerce. Today, I'm going to take you over a little bit about how to get paid online. This is going to be mainly from kind of selling on your website point of view, and mainly for products. Different rules apply for services and other things, subscriptions, but this is mainly for if you're selling your own products on your own website. So if we move to the next slide, this is a kind of interesting slide because it shows you the top 5 markets by e-commerce retail sales. So really this slide shows you the opportunity that can be gained from selling online internationally. You can see that the big red portion of the pie is China. China is fast becoming the destination for e-commerce. It will become massively important in coming years. And they pay very, very differently, and they do e-commerce very, very differently. So if you're serious about international trade, online, then it's a market that you need to look into and do your research in. The lightest grey segment is the US. Again, massive market, especially for UK products. It's really worth looking at exporting there because they pay in more or less the same way as we do online. The next biggest market is the UK, then Japan, and then Germany. We won't focus so much on Japan in this webinar because really there isn't a whole lot of international trade from the UK that goes into Japan. Germany is a much bigger market. So those are the 3 we're going to look at today, which China, US, and Germany. If we move on to the next slide, this is what the clever people at OC&C, PayPal, and Google think it will be worth to UK businesses by 2020. That is international e-commerce trade to UK businesses. That's an awful big number, and it will be good to get a slice of the pie. So if we move to the next slide, this is really what's important when thinking about your website internationally. So there are 2 broad strategies you can employ when trading internationally online. And the first one is skimming. So that's just setting up your basic site for international business. So that includes basic logistics. Can you ship the product? So these first 2 grey segments, no changes in basic logistics, account for 40% of market potential. There's then a series of other things for you to achieve the full market potential. But if you look at preferred payments, that accounts for about 10% of market potential. So that's quite a lot, especially if you're trading a lot in that country already. By putting the preferred methods of payments in, you can increase your sales by 10%. And this is always something you have to think about. You have to think about the cost-benefit analysis. Some of these payment gateways are quite expensive and time involved, and the shoe leather costs in particular are very, very high with Chinese gateways. Is that 10% uplift in sales going to help your business, or is it just going to be eclipsed by the cost? So that's something you really need to think about. Saying that, it also feeds into the trust element here, where trust is 20% of market potential, because people trust sites that take payments in the ways they're used to. So it's not purely preferred payments that we're looking at here, but if you can make it on 10%, if that's a worthwhile cost, then any extra gained by trust is just added revenue. So if we move on to the next slide, these are the top 3 countries and how people pay. So as I mentioned, USA pay largely through credit and debit cards. WorldPay, Braintree, Stripe, and Authorize.net are all different forms of payment gateway. Braintree is the largest. It's actually owned by PayPal. PayPal is smaller in terms of taking payments, but it's still very, very big. The WorldPay, Braintree, Stripe, they're just different methods. They broadly do the same thing. There are some benefits depending on size and what other areas you're shipping to, but broadly they do the same thing. If we look at Germany, however, Germany are very, very different. Germany have a payment system called ELV, which is unique pretty much to Germany, and what that is basically a direct debit, but it's a very, very different system to what we do, and most payments in Germany go through that. They're also big on PayPal, so if you're only wanting to test the German market, don't jump straight in with an ELV, and try it with something like PayPal, which you're likely to have already set up. Coming to China, China is a whole different kettle of fish. China, by and large, pay through their social media for everything. So obviously you have Alibaba, which is the world's largest e-commerce company, and they have their own wallet, similar to the Apple Pay and the Google Wallet that are around, but specific to Alibaba and their platforms. They've opened that up in recent years, and they've actually gone into partnership with Stripe in the West. So before, it was very, very difficult to begin to do Chinese payment gateways, and most go through Alipay and WeChat. But now Stripe have just launched a beta integration that you can integrate into your account quite easily. So that provides access to that market. WeChat is social media. WeChat is kind of like China's version of Facebook, but it's actually very, very different. You can do an awful lot more with WeChat. It's got a kind of chat function. It's a bit like WhatsApp in that way. It's got a kind of Uber function. You can do your shopping on it. I know someone that when he runs out of milk, he scans his milk and it adds it to his shopping list, and it automatically orders it, and he gets more milk the next day. So it's a lot more, and they have their own wallet, and again, a lot of payments are made through that. WeChat, unfortunately, in order to get onto that and seriously do that, you have to have a Chinese company, and that's a whole load of extra setting up, and can really eclipse any potential profit unless you think there's a serious market there. If you just want to test the market, as I mentioned, Alipay and Stripe now have this integration. It's worth looking at that. So if we move on to the next slide, I'm constantly asked, so which one should I use? If you're a small company, Stripe is fantastic. It offers a lot of options. It's very easy to implement. It is quite expensive. It's cheaper than PayPal, but it's still reasonably expensive. As soon as you get into the kind of six-figure plus online, there are cheaper options. But if you're selling, below six figures, then Stripe is a perfectly adequate option. And then there's PayPal. Now, I purposefully put Stripe and PayPal in there. It's not one or the other. You really have to be on PayPal. And I'll give you an example of why. So in my previous life, I was the e-commerce manager for Rubik's.com. So we sold Rubik's Cubes. I had quite a successful international web presence, and we redid the site and decided that we were just going to use PayPal as a payment gateway. So we could take credit card payments through PayPal, so people didn't have to have a PayPal account, but we thought having everything in one place was a good idea. We had a good deal with PayPal, and it all seemed sensible. So the new site went on, it was a much better site, and we ended up making a lot more money because of it. But we weren't sure whether having another option would help. So we thought, well, we'll implement something else. We'll implement something cheap to implement, and we'll take a look. Overnight, our sales increased by 20%, and out of all the orders, 80% of them were now using the new payment gateway. So only 20% were PayPal. There's a massive increase in revenues for us, simply by giving people the option of another gateway that they were more comfortable with. So if we move on to the next slide, these are just a couple of things you should really watch out for. One of them is VAT in Europe. If you are selling internationally, and if you are selling over these thresholds, you do have to pay VAT in these countries. There are some exceptions, and some countries are not so hot on it as others, but really the law is that you pay VAT if you're over these thresholds of exporting goods into that country. You can find out more about that on the link below. It's vatlive.com. It's a pretty good website, and they give you a lot of free information on that. If you go on to the next slide. So currency conversion is the other one, because these payment gateways will charge you for currency conversion, and that's something a lot of people don't think about. They just look at what the spot rate is, and they don't figure in what the currency fluctuations are, especially when doing things like Google AdWords and all those types of things, because it really degrades your margin. And when you're playing on very small percentages, which you often are in e-commerce, it can be a real killer. So if we move on to the next slide, that's the end of my presentation. I hope you enjoyed it, and thank you very much. Back to Will.
Many thanks, Emil. Thank you for going through some of the options there and some of the considerations in e-commerce in particular. Really good kind of overview, and great to hear some of your experiences working with Rubik's Cube. We're now going to open the floor for questions. So please do ask questions using the control panel on the right-hand side. We've got lots of time for questions today, so please do ask away. The first question we have is from Andrew, and he asks, what is your view of fast spring, as they also take away any tax implications? I guess it's going to be for Emil to answer first. Emil? Hello, Emil.
Hi, sorry, I was on mute. I didn't catch what the program was.
So that was Fast Spring.
I'm actually not familiar with Fast Spring.
Okay.
So it's not something I can help with, unfortunately.
No worries. I'm sure there's so many programs out there. I mean, Andrew also asked a question. He asked about the difference between PayPal and Braintree. I guess those two are a bit more mainstream in any case. So yeah, what's the difference between PayPal and Braintree?
Okay, so PayPal is PayPal's own system. So if you have a PayPal account that is attached to your bank account and takes money out of your bank account through PayPal, it provides added protection to the buyer. Usually, it's not actually very good for the seller, and and it is a system on its own that doesn't need a credit card. All you need is a bank account. Braintree is focused on taking credit card transactions and other types of transactions, but predominantly credit card, through PayPal system. So Braintree is a PayPal company, but it works on its own without PayPal. So if you can have one or the other, or you can have both. You don't have to have both.
Thank you. And another question for Emil from another Andrew, but a different one. He asks, when you said trading above 6 figures, there may be cheaper options than PayPal and Stripe. He's just asking for a bit of expansion on this. So I guess, what are the other options?
Okay, so you can bargain with these companies. If you're doing over 6 figures of turnover, most of them are interested in talking to you. The deal you strike depends on your bargaining skills and on your turnover, but usually they will talk to you about pretty substantial discounts at higher levels. For example, Braintree often go down to a little over 1%, but you look at what they're quoting on their website and it's double that. So it depends on the deal you strike and what your turnover is, but they're pretty fair because they like to focus on the slightly larger e-commerce retailers.
Cool, thank you. A question, I'm going to put this to Kevin first. It's from Stephen, and he asks about currency fluctuations, and he just asks us some tips about what you can do to mitigate the risk of exchange rates swinging in the buyer's country, and he asks this particularly in lieu of the fluctuating currency rates following Brexit. So Kevin, do you want to just speak a bit to currency exchange, what you can do to mitigate against it?
Yeah, it's a good question. Thank you. So certainly we would say to any business or anyone selling that to try and protect yourself against currency fluctuations, and it probably applies for any monetary sum. Probably the ideal way, or potentially ideal way, is if you have both payables and receivables in the same currency, that you can open up a currency account, for example, euro, US dollar, Swiss franc account, etc., with your UK bank. So that's one way, but clearly you need to have payables in the currency as well as receivables. But most of, for example, the UK high street banks will offer those types of currency accounts. The other way, which tends to be larger monetary sums, are what are known as forward foreign exchange contracts. They probably work better if you have larger transaction values, but if you have smaller value transactions but higher volume transactions, it can still work. But to some extent you need to estimate projected sales. So if you have been in business for a reasonable amount of time and have a track record of sales and a track record of existing customers, you can forecast your potential sales. And the concept there is you would go to the bank and say, well, during the course of the next 3 months, I estimate that I'm going to sell, for example, 20,000 euros. I appreciate that may be a high monetary sum for some and a lower monetary sum for others. And what the bank would do is they would give you a future exchange rate which would mature in the 3 months' time. And in many respects, so that exchange rate will not be hugely different from what it is today, because exchange rates are based on the underlying interest rates in the countries concerned. And at the moment, the interest rates in Europe, the UK and the United States, which are slightly increasing, are all very at low levels. So the future exchange rate is not hugely different from what it is today. So that could be a good way, but there needs to be some track record of sales or a definitive contract you've entered into. But forward foreign exchange contracts are a useful way and used quite often by businesses. So those are the primary ways of mitigating the exchange rate fluctuations.
Thank you, Kevin. And currency is something we'll hopefully be tackling in a webinar in the autumn as well, so look out for news on that. We've got a few questions on VAT. First thing I'll say to these is that we have done VAT webinars before, so you can refer to those for some of these questions, but I will ask a couple because they're related to e-commerce specifically. The first one again will be for Emil, and it's from another Andrew, but a different one again. And this question is, do Stripe and or PayPal provide help with EU VAT obligations? Emil?
To my knowledge, no, they don't. It depends how you're selling. Some of the marketplaces and things will handle VAT for you. But if you're selling direct from your own website, you probably need to go and get some separate advice on that. If you're reaching those thresholds, and if you're selling products, those VAT rates are specific to products rather than services.
Thank you. And another VAT question from Callum, and I think this is in reference to your VAT country slides. And he asks, are the VAT limit guidelines per transaction or for a given period total? And he also asks, do PayPal offer a fee return service, or do other payment services also offer this? So that's two questions there, one on the VAT slide and one on fee return service.
So in regards to the slide, that's per annum turnover. So if you're selling more goods value to those countries than those in total per year, then you need to be looking at registering in those countries for VAT. It's called distance seller or distance purchase VAT, and it falls under slightly different kind of legislation, and it is specific to e-commerce. It was brought in because there were a lot of people selling via e-commerce internationally and not paying any form of VAT. So it's becoming more and more policed at the moment. It's not particularly there's not, although there is legislation and laws around it, then they're never really enforced at the moment, but it's getting hotter. There are a couple of countries that are beginning to do that. So sorry, I've forgotten what the second part of the question was.
And the second part was, do PayPal offer a fee return service, or do any other payment services offer this?
Not to my knowledge, no.
Okay, cool. And we're going to do just one last VAT question, and it's back to the Andrews again. And Andrew asks, do the VAT limits apply if you're selling B2B, or is it only B2C? Emil, do you know?
Yeah, so they're B2C. What the B2B limits are, I think they're slightly different. The whole way it works is slightly different. I mean, we specialize in B2C products. So, but the whole B2B process is again quite different. You would probably be better asking Kevin that one.
Kevin, do you have any response to Andrew?
Yeah, I think Emil's covered it well in that the processes are definitely different. In some cases, the monetary sums might be similar, but it's fair to say that the processes are different. And I think coming back to the first question, again, to the best of my knowledge, the providers don't tend to provide support around that. Which is why you have some specialist providers around VAT. And equally, the point is, I think historically there's potentially been, wouldn't use the word less enforcement, but there's certainly now greater attention to VAT collection. So businesses need to certainly be aware of that. But I think, Will, as you said, there has been a webinar on VAT because of the actual importance of the topic now.
Yeah, absolutely. And we did actually do a VAT for services webinar as well, which might help in that question in particular. That was in March, so I can circulate the link to that in the follow-up to this webinar. Another question for Kevin. It's from It's from Harry, and the question is, how do you go about getting a letter of credit and how much do they cost?
Okay, so if you obviously a letter of credit could be known what as an import or an export letter of credit, I'm not sure, Harry, if you're asking from the importer or exporter side. If you're an importer, you would go to your bank, your main, if you like, high street commercial bank, and they would issue the letter of credit on your behalf, but they will look at your business in terms of credit facilities. So that's one aspect if you're an importer. If you're an exporter, the letter of credit is actually issued by your buyer. So your buyer overseas would need to approach their bank overseas, who in turn will look at the credit standing of the buyer. The buyer's bank overseas, who are then known as the issuing bank, will then send a letter of credit through a bank, for example, in the United Kingdom, which may be, again, your high street commercial bank in the United Kingdom. Again, happy to provide further information on letter of credit, but that's the general process. But it does require the bank issuing a letter of credit to take a credit view on the actual buyer of the goods and services.
Thank you, Kevin. Another question for Emil. This is from Zandra. Zandra asks, is PayPal fully PCI DSS compliant? And how about the compliance status of other popular payment gateways mentioned? I'll throw one at you, Emil.
Yeah, so all the major ones are fully compliant. They have to be. There's some quite sort of strict rules around that and taking payments, especially internationally. So yes, they are all compliant. You don't need to be compliant if you're using them. That's one of the benefits and is why taking payments yourself on your website has largely been drowned out, with the exception of people like Amazon, who do massive amounts of sales online. There's just no reason to do that. Yes, they are compliant for all of the major ones.
Thank you, Emil. And another question, and it refers to your experience with the Rubik's site. It's from Andrew again, and he asks, what are the typical costs of offering alternative payment methods via an e-commerce website as per your Rubik's site, and what are the potential negatives in offering more / too many options?
Gosh, costs. How long is a piece of string? I mean, Stripe is free, and if you're using a platform like Shopify has theirs built in, but if you're using something like WooCommerce or Magento, it's very, very easy to implement that. In fact, most of them. The costs really come from things like exchange rates and any fee they take for handling the transaction. With regards to benefits of having multiple payment gateways, I think you need to have the ones that are specific to your country if that uplift is going to provide extra revenue. So if you're currently selling £100 worth of product to Germany, but the cost of implementing one of the German payment gateways, letting you handle the ELV payments is going to cost £2,000, then it's not a sensible use of money. So you really have to look at that, because your increase is only going to be 10% or thereabouts. It's a good rule of thumb for getting those preferred payment gateways online. So how many you need, and are there any benefits or costs to it? You can geographically locate, if your system's sophisticated enough, the ability to pay to those countries. So it is possible so that only German IP addresses see the option for ELV payments. Having too many on there, if you don't have that in place, I don't think there are terribly many negatives, so long as it's providing a return on the investment. I mean, the only reason we do e-commerce is to get money. I mean, we're here to make profit. It's why we sell stuff online. If you're spending a lot of money implementing all the payment gateways, then it's not a sensible use of funds. Pick 2, 3 of the biggest that are the biggest in your markets that provide you with the best options. So if you're selling lots to Germany, find ones that handle German payments. If you're selling lots to China, find ones that handle Chinese payments. If you've got lots of Nordic countries, there's one called Ideal, for example, that's pretty much exclusive to Nordic countries. And even within Europe, almost every country has their own one. You don't have to be on all of them. You just pick the ones that are going to provide the best return on investment.
Thank you, Emil. And another question this time from Ian. He asks, it's probably for Kevin. He asks about setting up a bank account in an international market. He just asks, what's the process for doing it? Who's the best first person to approach? So over to you, Kevin.
Yeah, again, in some respects, it's been harder to open up overseas bank accounts, partly because of concerns in the banking financial system over the likes of money laundering and compliance. So generally, to open a bank account overseas, the overseas bank would prefer that you have a limited company legal entity status in the country. Effectively, you're seen as being part of that country, and you have to report to the likes of accounting and financial standards of the country concerned. It's probably a lot harder now to open up a, if you like, a non-resident type bank account. So that's probably the way. So in terms of your choice of bank, in an ideal world, you would go to your UK bank, who would either have an overseas subsidiary. That's probably a lot harder now, with the perhaps exception of the likes of the banks of HSBC. Your UK bank would possibly have preferred partners overseas as well. So again, you can speak to your UK bank, who can make some suggestions, and possibly, if you're a good customer of your UK bank, they could possibly provide you with a reference to the overseas partner bank as well. You may want to obviously look about where you're located. So if you have a specific location where you have a facility overseas, you might want to actually choose a local bank to that area. So in some parts of Europe, for example, banking can be quite regionalized. So that's something to consider. Even within the United States, banking can be quite regionalized as well. But again, hopefully your UK bank will be able to assist you in that respect.
Thank you, Kevin. And I guess this next question is probably for Emil. It's from Callum, and he asks, after implementing the most appropriate payment method for a given region, what are the next biggest barriers to e-commerce?
Well, there are lots of them. If you look back at that graph, which I can't remember, if you give me 2 seconds, I'll tell you which slide it was. If you look at slide 4, Will, can we go back to that? Yeah, that's one. These are some of the biggest things that you need to address when selling internationally. Obviously, basic logistics. You need to be able to ship to that country. Language is not as big a thing as everyone makes out to be. If you talk to a translator or anyone involved in that, they will tell you that language is the most important thing. If your website is in English, it's not. It's really not. The uplift you're expected is between 1% and 2%. So if you're doing such massive numbers, that the vast cost, I might add, of doing and managing translations is going to provide you with considerable marginal gains, then it's worth it. But unless you're a sort of multi-billion-dollar company, the likelihood of language helping you at all really is very, very slim, because the costs in doing it, it's not just the translation or the initial translation, it's the systems, it's the cost of management, it's all these things. I mean, Google has some tools, you know, the translate tools and things you can use, but actually if it's in English, it's not such a big thing. Pricing, obviously selling things in euros, in dollars, in RMB, in the local currency, very important. Trust, we spoke a little bit about because of the preferred payments. There's a lot of things that go into trust, and in some ways is the most difficult one to address. It's things like making sure people can contact you, having chat bubbles, having an email address that is responded to quickly, sometimes having a phone number on the site. It's really small things sometimes, like when you're checking out, is the address in the right order? You know, where does your postcode or zip code come? Is it called a postcode or a zip code? Is it, because this is things that turn people off. And they're very, very small things, and you really need to split test a lot of it and do the marginal, you know, aim for the marginal gains with it. But it's one of the most powerful areas. Obviously, preferred payments we've spoken about, and then there's speed. I mean, speed is a serious thing. If you don't capture people very, very quickly, they're gone. And if your website is slow to load, they're gone before you've had a chance to capture them. So having a website that is fast in those areas is very, very important. And the way to do that is through things like content delivery networks. Google has a great little tool called Test My Site, I think it is. If you just type into Google Test My Site, it will tell you your level of mobile optimization and how quickly your website loads on mobile and on desktop. And although it doesn't do international or tell you where you're loading quickly and where you aren't, it does help you to address some of the things, because it gives you a list of areas you're falling down. So those are some good places to start when looking at optimizing your site. Just a comment outside of this. This is only your website that we're talking about, and optimizing sales on your website. For a lot of e-commerce companies now, the vast majority of sales don't take place on their website. The more revenue is generated from marketplaces such as Amazon or eBay, or more bespoke marketplaces like Etsy or some of the others. So it's really only a small part of the strategy. The goal has always got to be draw people in and then lead them to higher value purchases on your website. Using things like marketplaces can do that. You pay a percentage to Amazon or to eBay, but you have access to markets. Don't think about them as massive profit generators. Try and lead people to your website to do that, because you can take the full margin. But you have to think about it as part of a strategy. It's not just about selling on your website. It's much, much broader than that.
Cool, thank you, Emil. And I think on that note, because that question allowed us to kind of recap some of your points quickly, we're going to probably end the Q&A there. So thank you once again for answering those questions. I hope we don't have too many angry translators on the call today. But yeah, thank you both, Emil and Kevin, for two really great presentations, a really great overview of e-commerce and getting paid through it, and also really lively Q&A there as well. So thank you, everyone, and I hope you found today's session useful.
Thank you very much.
Before heading off, I'd like to draw your attention to some of the upcoming courses and events being run by the Institute of Export and International Trade. I've highlighted courses in the basics of importing goods and advanced financing in international trade, two things we get asked about a lot here at Open to Export. And there are many more courses being run by the Institute throughout the summer, which you can find details of at export.org.uk. And we also have another World Trade Summit taking place in the Southwest this July, which will include networking and some great talks around the theme of sketching a blueprint for global Britain post-Brexit. The summit in Northern Ireland that took place a week ago was really great fun, so I definitely recommend looking at that. The next Open to Export webinar takes place on July 12th and is on streamlining your logistics processes using some of the cutting-edge technologies out there and that are available for UK businesses. Zen Cargo are very generously supporting us in the running of that session, and I'm certainly looking forward to hearing from them on the advice they have to give exporters looking to use new technologies to save time and money during the export process. That's all from us for now. Please take our exit survey to let us know what you thought of the webinar and to give us any suggestions for improvements or future topics. But for now, thank you very much, everyone, and have a great, very sunny day.